Hi everybody. So I had fun making a video yesterday on Santa candles, and today is Saturday, and I've got nothing to do because the wife's busy. So I thought, hey, I'm just going to make another video. So this is the video on Thursday. So yesterday I did Fridays, then this is the day before, so that would have made that June 5th. This is NQ. These are 2 minute. This 2 minute chart. I use Heikin without wicks. And on the bottom here, I'm showing a bespoke MACD. Again, when you've been trading for 10 years like me, a lot of things become bespoke just because you find something that works even a little bit better. And I'll give you a great example right here, which is where price is just hitting this line for, let's see, 11, 22, 45 minutes, and goes up, down, up, down, up, down. But at a certain point, I'm no longer interested in even considering a long because my momentum is just dying here. And in fact, it took a while for the market to just kind of realize that, and down she went. So this bespoke MACD gives me the ability to see what's happening before the market kind of wakes up and realizes what's happening. So anyway, again, Santa candle is the result of a retest, right? So price typically will overshoot and come back down. It'll kiss a particular line, and this candle here, when it goes back up, is a thumbs up. It's that retest was a success, and we are on our way. I like to just name things, it helps me remember them. So I decided to call it a Santa candle because this is such an easy thing to trade, and it's a nice gift, right? So there's that. And there's many different ways that we can analyze this chart. Yeah. And I'll show you a few different ways. I would say too that a lot of people, or newbies anyway, like to trade. They try and figure out where support is and where resistance is, and they kind of want to make their trades based off of support and resistance, which is not wrong. After all, this is the market proclaiming this as support, right? Again, the analogy I like is a guy in a parachute up in an airplane, and just before you jump out that door, you're going to double check that harness and your belts and all that, and make sure you're all good, right? And that's what the market is doing here. It's checking everything. Once it's really secure, has no more anxiety, it's willing to put millions of dollars on the line because it knows this is a high probability continuation here. Okay. So that's again the art and science of support resistance is absolutely fine. Personally, I like to look at it a little bit different. I see the stock market as the art and science of breaking support and breaking resistance, right? Because here it had to break through, right? It broke through here and it respected it here. So it's a 50-50, right? But if you're always anticipating a bounce, you're going to have a lot of red trades. So you have to sort of see, when is the market respecting it and when is it breaking it? And I just think it's better to have an understanding of when something's getting broken. Otherwise, you're being surprised by the breakage, which is a red trade. And it's easy to make money in the stock market. The hard part is not losing money. I know that also sounds kind of weird, but it's true. Okay, so how do we analyze this chart? So I'll try 3 different ways. The first way is to draw what I refer to as a Q matrix. So I'm going to put the bottom anchor point at the bottom, and I'm going to put the top at kind of a significant hump. And I'm sorry, there's just no better way to describe it other than the phrase significant hump. It's just not a very scientific way, I know. So I've already done it over here. So I put the bottom anchor point here and the next one here at this significant hump, right? And that kind of creates a grid that will have value to me for the rest of the day, or at least while price is rising and going up. When it starts to fall dramatically like that, I like to redraw my cues the other way. So I put the bottom anchor point here, and I'll put the first one the next one at the first major hump. Okay, so here we go. And let's just minimize this a bit here. And so we have lines, and I've divided my cue matrix into major cues and minor cues. The major is a solid line, the minors is a dashed line, simply to kind of divide up the screen. Otherwise, if you have just straight solid lines everywhere, all you see are obstacles. And that's hard to trade when all you see is obstacles. And again, trading is like trench warfare. So here we are in World War I, and we are in trench warfare. We're going up, we have a trench, we broke through, we went beyond, we came back down for the retest, for the kiss, and it's a positive thumbs up, right? So we have that lightning bolt, right? The Harry Potter lightning bolt. Up we go. We went further to the next major cue, came back down. Either you see as it bounced down here, as it bounced down, see a little doji right on the minor cue there. Came back down for a retest. Again, little lightning bolt. Up we go. We claimed it. We were past that trench. We're on our way. It actually did another little lightning bolt here, right? Again, it overshot, came back down for the retest. It said, yep, that's solid. Up we go. And sure enough, up she went. And even though I drew my cues here at 10 o'clock in the morning, it called out the top many hours later, right? And because I have decreasing momentum, as I said, I'm no longer interested in going long. Even though it kind of popped above, I just see momentum is dying, right? And so down we go. Zoop. Overshot, came back down, little lightning bolt, but in the other way. It reclaimed it here, went down, a little pause, but kept going, all the way down to here, the echo of this low here. Went a little further, came back up, up she went. I have the 50% in yellow and the golden pocket here in a kind of a dashed orange color, yellowy orange. So it's hitting it, but I'm also seeing momentum slowly decreasing here. And sure enough, it died. Down she goes, right? And it went way down. So if we're going to look at the way down, it would be better to redraw the cues going down, which is something that I have done. Again, overshot, came down, right? Reclaimed it, away she went. Did a little bounce here off this major cue. If you don't draw cues, how would you know that this is a place of support where price is going to rise again? You wouldn't, because nowhere is it here, right? Even pre-market, there is just no way to know. So you'd be surprised. You'd be short and like, holy shit, it's going the other way. Why? Well, I know why. There's a major cue right there. Came down, right? I'm sure if I had wicks on, it probably kissed the wick. Up she went, but it could not go past this line, which is an echo of this line over here. So that's fair enough. We see a couple of candles here, and it broke through. You don't always get that Harry Potter lightning bolt situation. Sometimes it just crashes right through. But when it's crashing, it just crashes, right? Elevator down. Okay, and again, it stopped. If you didn't have cues, you wouldn't know about this bounce point, you wouldn't know about this bounce point, and you'd be totally surprised as to why it just chose magically to stop here. And why did it go up here and do a little M pattern here and then fall down some more? So there's lots of values in the cues. Okay, let's put this away. Another way to look at price action is to ask yourself questions like, well, why was this? You got to be able to answer these questions. Why is this support here? And why was there a line here? I mean, we saw it with the cues, but there's definitely a line here. There's a big line here, and where does that line come from? There's another line here, clearly. And it went all the way down to here. And the question is, well, why there? And the question is also why here. And as I pointed out in yesterday's video, I have another chart that I'll bring over here. So I'm going to bring back the chart that I had yesterday, and we see the lines that I just drew. The white line here was off this solid yellow here. We had another major line here. There's an orange line here. We have, I didn't draw it, but there's a line here. And again, it reclaimed it here, right? Overshot, went up. There's a big line here, and here at the gray, went down to this gray, right? So when you have multiple screens, I mean, I have 6 screens here, 6 32-inch screens. The advantage of having lots of monitors is you put on these charts and you see, okay, well, there's a huge orange line here. It's resistance. It's a ceiling, right? So it's important to have the right dashboard and the right indicators. And the other way that we can look at it is through here. And right, this is a moving average with the band lines above and below that I like. And we just see so clearly, right? It just hit the bottom, did a little bounce, a little burp, right? It's a Harry Potter thing, right? I mean, it came down, kissed it, went back the other way, right? Like that. Okay, so Harry Potter lightning bolt. Again, outside the band, we have a line here perfectly described by my blue line. It went up, a little doji right there on the line, right? Another little Harry Potter lightning bolt. Up she went and kept going. And again, my candles are green when they rise, red when they fall. And if they're outside the band, they're white. Up she went. And again, here, if I could put on my bespoke MACD again, remember how halfway through it kind of went red below the 0 line? Well, that was right there. So remember I was talking about how my bespoke MACD kind of called out the the drop towards the momentum drop. As soon as I cross that blue line, we see momentum just go right to red, right? So these little blue lines are just money makers. Okay, I'm just going to get rid of that, and I'm just going to lower this to nothing. Okay. Again, when price is outside the blue band, it's typically in warp speed. What's on the inside is usually kind of impulse power. And here we just have, well, I used to call this, I still do, I guess, call it a money line, right? It's overshot, came in for the kiss, right? That same little Harry Potter lightning bolt, but to the downside, boom, just like it is here. Okay, doom, 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 kept going, and it dropped and dropped and dropped. It did rise, and this is another place where we see kind of a line here. There's, you can sort of see it in the candles. Maybe I should expand that so you can see that better. Okay, let's do this. You know, it's little tiny candles until it popped above or went a little harder, but then it kind of went sideways. And if you look, momentum is dying here. It's decreasing, okay? And then you sort of see candle, candle right here, right on the line, basically, right? And then it just kind of went through. Now we have 2 candles closing around there. Boom, boom. And when it broke through, again, you don't always get those nice Harry Potter signals. Down she went. And again, it went up. And if you don't have this particular, dashboard, you wouldn't know, like, well, why did it stop there? Same thing. We're seeing 1, 2, 3, 4 candles right on the blue line. These are 2-minute candles. That means the market spent 8, well, maybe almost 10 minutes kind of thinking about it. But when it fell out, when it broke through with some gusto here. And you see it again trying to reclaim, trying to do a little W. And what is an M but a failed W? And you see it right there on the line, right? And then this is just the end of day goofiness. I'm not an end of day trader. It's just a little bit too volatile for me. Okay, so that just tells us a lot. You know, it's a narrative. It tells me the plot. Why is it doing what it's doing? You know, uh, you know, even if it candle pops green here, I'm not going to go long unless it's reclaimed it, which sometimes it does, right? But it fell through and it broke through, right? And it just gives me a really nice understanding of what's going on, and that's basically all it is. If you can predict the next 60 seconds or 120 seconds, and you do that 4 or 5 times in a day, you can easily make $1,000 a day, in my opinion. Because a little move for a minute or two with a few contracts, you're looking at least a couple $100. Do that 4 or 5 times, and you're good. And you make $1,000 a day, $250,000 a year. Life improves dramatically. Anyway, I had fun, and I hope you had fun too. And just before I go, so I trade off a 2-minute chart. I keep a great big eyeball on the 5-minute, and I even have off on the periphery here the 10-minute chart just to see kind of the overall thing. And this was the same day. And you just see it again, right? It just kind of hugs that line, came down, bounced off this orange, went up, couldn't really go past this little line here. 10-minute turn red, right? And down she went, right back down to here. A little pop, but again, to where, right? Right to that middle. Came down, little lightning bolt thing here, right? So, um, you know, even if you're terrible, just terrible at charts or trading, if a candle is green, more than likely it's followed by another green candle, right? Usually. I mean, maybe 65% of the time, I'm going to guess, you know, assuming for a lot of chop, right? And if it's red, don't be long. Anyway, this is it for my Saturday fun. I hope you're having a great weekend. Woohoo!